What happens when interest rates rise in a market with increased home prices and you have increased home insurance on top of that? There has been a lot of crazy in the world the last couple of years, real estate included. Even so, I still love selling Destin, Florida real estate. I love staying on top of what is going on in my field, and I think it's really important to share it with you. Today, I really want to talk about the adjustable rate mortgage. I know it got a bad rap in 2008. It is making a comeback, and the lenders, banks, mortgage brokers have added some safety features to keep it in check this time. So let's see if it is right for you or not. Here in our area right now, the average home price is around $714,000. That is a 15% increase from this time last year. We really can't use the average home price in our area because we have such a wide variety of different properties. We are on the water, we have water all around us with the bayfront, we have the Gulf front. So we really have to use that median home price, which right now is at $430,000, and that's for all of our area, and that is up 17%. So depending on which area you're in specifically, you're looking at the higher numbers. You know, you go into some other areas, you're looking at the lower numbers. But again, having said that, it is really hard for buyers to get into homes right now. You've got the increased interest rates, the increased home prices, and in our area in Florida, or all of Florida, you have increased homeowners insurance. So buyers are looking to that adjustable rate mortgage as a strategy, mainly to get into a home with a lower monthly payment, but they're still getting more for their money. So today I really want to talk about the adjustable rate mortgage versus the fixed rate mortgage, but I really want to focus on that adjustable rate mortgage, the pros and cons, and again, is it right for you? Please keep in mind that I am not an expert in lending. I do like to stay on top of what is going on. I always look to my trusted vendors to get guidance on all things real estate that's outside of my expertise. And when it comes to lending, I love talking to Bobby Andrus about all things in the world of a mortgage. The adjustable rate mortgage typically starts out with a lower than average interest rate, and then they adjust to either a higher or lower interest rate once you have exceeded your time frame that was built into your loan. Typically it goes higher, but that's not always the case. It is going to depend on the market. But right now we have a 3, 5, 7, and 10-year plan. It's going to be determined based on you and what you qualify for. But you would be locked into that lower interest rate for that amount of time respectively. And then once that time frame is up, again, the interest rate will start fluctuating depending on what the market is doing. So a 5-to-1 adjustable rate mortgage, for example, will change its interest rate after 5 years once a year. That's just a quick example to kind of give you an idea of how it would work. 5 years, lower interest rate, then it starts changing once a year. That's where that one comes in. I would say the biggest benefit of having that adjustable rate mortgage is when you know you're not going to be in your home probably for more than 7 years. I have been working with a lot of people right now who do relocate often, whether it's military or just whatever job or company they work for. Investors, if you are investing in rental property or you're going to do a fix and flip, if you know you're going to sell that home before that interest rate becomes unlocked and starts fluctuating, it is literally a no-brainer to go ahead with the adjustable rate mortgage right now. Even if you don't know that you're going to be moving within that lock period, still talk to your lender about the adjustable rate mortgage. Ask them questions, get all the facts. Having said that, you could still use the adjustable rate mortgage as a strategy, getting into a home at a lower monthly payment, again, getting more for your money. You just need to know what you're getting into before you go down that route. Because of borrower protections that were put into place by the Dodd-Frank Act, the adjustable rate mortgage is way less risky than it was in the past. And here's what some professionals have to say about it. Dodd-Frank required lenders to fully document a borrower's income and assets and their ability to repay an ARM before the loan was made. And it said that borrowers must qualify for the loan based on the fully indexed rate, not the introductory or teaser interest rate. Just to name a few, here are some of the specific protections that I've put into place. They are now capping out on how much the interest rate can actually increase. They are capping out on how much the monthly payment can increase. They are not just handing them out. So buyers looking for loans, when you're going in and you're talking to your lender about these adjustable rate mortgages, whether you know you're going to be moving quickly or not, or your investor who's going to turn it over quickly or not, these are things that you need to be talking to your lender about. The cap on the interest rate when it starts fluctuating, the cap on the monthly payment, and what you really truly qualify for. In my professional opinion, and not that I'm a professional in lending, but I am a professional in the world of real estate, there aren't too many reasons to not look into that adjustable rate mortgage. The only real risk is if you plan to stay in your home, you go into it with an adjustable rate mortgage, and then it starts fluctuating, can you really afford that payment that could go up? Again, one thing that you will talk to your lender about moving forward with an adjustable rate mortgage to see if you can actually handle that. But with the fixed rate mortgage, obviously it's going to be more predictable. You're going to know what you're paying each month. You're going to be able to plan and have that budget. If you need to live by a budget, that fixed rate mortgage is probably going to be better for you. But again, the real risk of that adjustable rate mortgage is once it starts fluctuating, where is the market? Where is it going to be? And when you go into that loan, there is no way for us to know where the market is going to be 3, 5, 7, 10 years down the road. So that is just something to keep in mind. But for me, that is the only real risk at this point in time, considering all of the, again, increased home prices, increased homeowners insurance, and really just being able to use whatever strategy you can to get into that home and get more for your money. I really hope this video was helpful. We have so much information on our YouTube channel, so check it out, and we will see you next Thursday. Bye.